The views and opinions expressed on the following program are not necessarily those of the staff and management of KLAY or those who advertise their products or services on this station.
Thank you for joining us for another exciting adventure on Locking It In with Deb and Pear. I'm Deb, a real estate Sherpa with Coldwell Banker Bain in Puyallup, Washington. The program is intended to be a resource for information of all things related to real estate. We'll be talking with industry professionals about a variety of topics, and it's important to keep in mind that every situation is unique. Please always seek the advice of a properly licensed professional before applying any of the information or advice shared here. Also, you should always seek the advice of your attorney because we can't give legal advice.
Ferry Independent Mortgage Corporation NMLS number 2289 is an equal housing lender. This is not an offer to enter in an agreement. Not all customers will qualify. Information, rates, and programs are subject to change without notice. All products are subject to credit and property approval. LON NMLS number 173529, Perrin Walker.
All right, thank you, Perrin. Well, welcome to another show. Today is very exciting. We're going to be talking about 203K rehab loans and home inspections and how they can be an advantage for first-time home buyers. But first, we want to thank our guests from last week. We had Andrea from Coldwell Banker Bain. She shared with us the quarter two market report published by Coldwell Banker Bain. And we had Karina Obar from the WSHFC, the Washington State Housing Finance Committee, and she discussed with us a down payment assistance program that every first-time home buyer should really check out at heretohome.org. So, Perrin, last week, can you give us a breakdown of what we discussed last week on the down payment assistance?
Well, Karina was very helpful, and we discussed the Washington State Housing Finance Commission. They were in the House last week. A review of the basics. The down payment is covered, and then some of the closing costs are covered on normal, conventional, and FHA purchases. They offer typical conventional and FHA first mortgage accompanied by a second mortgage at 0 or just above 0 interest rate. That covers the down payment of 3% or 3.5% with FHA, with some of the closing costs covered as well. VA veterans buyers can receive down payment assistance as well to offset the cost of the VA funding fee and other closing costs, but deposits for earnest money and appraisal are still required. If closing costs are still a burden, your realtor may be able to negotiate with the seller's agent and seller to have them cover all or part of the closing costs. I can offer these loans through my company, Fairway Independent Mortgage, and there are over 100 other lenders in Washington State that partner with Washington State Housing Finance Commission and offer these loans. Also, WSHFC partners with lenders and real estate professionals throughout the state to offer home education classes to better educate first home buyers about the home buying process. These classes last about 5 hours and are required for getting these types of loans.
Wow, that's quite a bit of information, Perrin. I think it would be helpful if you didn't tune in last week or you want to review, you can download the last episode. You can go to Facebook at Locking It In, and we have a link there that will take you to our archives. And also, you can also follow us on Facebook at Locking It In if you want to have a topic suggestion or give comments for the show. You can also email us at ask@lockingitin.com. All right, so let's see. Next week we're going to be talking about carpeting, and we're talking to Nick Baker of Voy Home Services. And, he seems to think carpeting is a great idea, and it seems today most homeowners are shying away from carpeting. So we'll hear what he has to say about that. And anyway, Perrin, you were telling me about another down payment assistance program that you just found out is available.
Yes, it's offered through our company as well. It's called the Chenoa Fund. Similar to the Washington State Housing Finance Commission's loans, but the terms are just a little bit different. For example, Chenoa's small down payment assistance second mortgage in some cases can be forgiven after a few years. We will have Sean King from the Chenoa Fund on the program in a few weeks to go over and explain their down payment assistance programs to supplement what we heard last week from Karina Obar from the WSHFC.
Okay, great. Thank you, Perrin. So I don't know. I'm a little bit troubled these days by the rental market. It just seems to be a bit ridiculous. Is that the right word? I have a buyer client, and she's found a home, thankfully. She lived in an apartment complex near. She was always telling me about these apartments by her near there, where all of the tenants were. I don't know. It sounded like kind of like they were almost rioting. Apparently, that was at the Tiki Apartments. They were apparently given a 20-day notice in May when the property was purchased by an investor who wanted to close them down, refurbish them, and upgrade them. And the reason this is a problem, if you're a renter, you don't have any control over, how much money you spend on your rent. You might think, okay, I can afford this much, and then they raise your rent and you can't afford it, and then where do you go? You don't have a choice unless, well, if your income goes up the same amount as your rent, well, maybe you're all right, but I don't think that's been happening. I don't know. What do you think, Perrin?
Well, I'm sure it's been going up. Has it been going up like 30-40% or something in some cases?
Actually, I was looking at some of these statistics, and according to Tacoma, the city's their landlord tenant coordinator, Chikata Elder, he cited some statistics. Most rent increases are about 3 to 6% a year. Between July 2016 and May 2018, the city received about 50 calls about rent increases. The largest rent increase was 100%.
Wow. I've heard of 30-40% recently, but not 100%.
100%. You know what? The next highest, 87.5%.
Wow. I don't know how anyone can handle that.
So, yeah. And what else are you going to do when, in order to move, first of all, you need to have first month's rent, last month's rent, your security deposit. You need to have moving expenses. And you're also going to be paying more rent, most likely. It's kind of a difficult situation, and one really good reason why you want to become a homeowner as quickly as you can.
Well, with the down payment assistance programs and the sellers paying closing costs, you can get in for less than first and last month rent plus deposit. There are a number of other down payment assistance programs in Pierce County. For example, the Pierce County Coalition for the Development of Disabled offers a $39,600 second mortgage program to cover down payment plus. Pierce County DPA down payment assistance covers $24,900 if you're in the county. Tacoma also has a $20,000 second mortgage available.
Oh, wow. Yeah, that sounds like some great programs available. We'll definitely have to cover those on our show. Yeah. So, anyway, the city of Tacoma, they are crafting a tenant bill of rights, apparently, to handle this rent crisis. Even some of these notices, they have the eviction notice on the door, and in one case, the tenant was blind, and they're not required to put it in Braille. So how would a blind tenant know they're being evicted? How would they know? Seriously, I'm surprised there's no laws against that right now.
I know Seattle is really moving in that direction really well. Tacoma is following, though, isn't it?
Yes, it is, and I think Seattle does have a tenant bill of rights. I think they passed it in the last year or so, fairly recently, I think. Yeah, and I think it prevents tenants from being evicted because they have a maintenance issue as well. So, like if you say your stove's not working right, then you get an eviction notice. So I think it's really important that we get this Bill of Rights. We need to have at least 60, 90 days notice for people to move.
Yeah, right now, what is it, 20 days or something like that?
It's 20 days. You cannot save enough money for moving expenses, first and last month's rent and security deposit in 20 days. These are people who are on, generally speaking, a fixed income. I mean, they work an hourly wage and they can only work so many hours. So
that's true.
Their income is limited. So anyway, we're all hoping for a tenant bill of rights in Tacoma very soon. If you have any comments to say on that, you can comment on our Facebook page, ask@lockingitin.com.
Or give me a call at 253-226-6454 at the office, and I would be glad to answer any questions you have.
We'll be right back.
You wanted to see me?
Yes, please, have a seat. So here's the thing. When this company brought you on, we took a chance on you. You didn't have that 4-year college degree we typically look for.
Right.
But we gave you a shot anyway. And since then, you've worked incredibly hard and given it your all.
Thanks.
You've been an important asset to the team, but I don't think you can be an intern here anymore. We want to hire you.
You're serious?
Absolutely.
Find your next great employee. Introduce yourself to the grads of life. Who are they? Talent worth knowing about. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or even mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
I won't let you down.
I know.
Don't miss out on a resource many innovative companies have already discovered. Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
I'm Ken Griffey Sr.
I'm Ken Griffey Jr., and we're proud to be men who speak up about advanced prostate cancer.
Not too long ago, we were a father and son team hitting back-to-back Major League home runs. Nothing could stop us until prostate cancer stopped me in my tracks.
1 in 7 men will be diagnosed with prostate cancer. Lucky for us, Dad caught his early.
It was difficult to speak up because of what was happening to me. 1 in 20 men will have advanced disease when first diagnosed.
Unfortunately, too many men live in a silent era because below-the-belt issues can be tough to talk about.
If you are living with prostate cancer and have symptoms like aches, fatigue, difficulty walking, sleeping, unexplained pain, or difficulty doing normal activities, don't stay silent. The most important thing is the support of your family.
If you or your loved one has prostate cancer, speak up. Visit menwhospeakup.com to learn more.
This was a public service announcement from Zero, the end of prostate cancer.
Welcome back to Locking It In with Deb and Pear here on Clay 1180 AM. And right now in the studio with us, we have Roger Merrell Jr. He's an inspector, and his specialty is 203K rehab loans. Roger, can you give us a little information about yourself?
Well, first of all, good morning, Pear and Deb.
Good morning.
Thanks for inviting me. Yes, my name is Roger Merrell Jr. I've been in the industry for 27 years with emphasis on rehabilitation lending. Licensed home inspector in the state of Washington, as well as a housing quality standards inspector with a few other credentials. But primarily we're here to talk about the rehabilitation loans that are available for the general public these days that a lot of people don't know about, and you know, they've heard a lot of nightmares, and some of them are true, and we're here to clear all that up.
Sounds
Thank
good.
you, Roger.
I know with the market today being so competitive and so many homes that are just not quite ready to be lived in, this is really a great loan that people can get, the rehab loan.
That's correct, Perry. It's been around for a long time. I think right now with the housing stock that we have out there that's left, the majority of it is either going to investors to flip and or is in disrepair. And in my opinion, I've always stated for many years, every home is a candidate for a rehab, or it would be a custom built home for that buyer.
Even if it's just new carpet, new paint, new landscaping, whatever.
You got it. We have a part of our program called the Limited that FHA insures that is directly for the cosmetic stuff with no structural alterations and or repairs.
And these loans are just as easy to get into as a regular FHA loan.
That's correct, Perry. It's a FHA is FHA. It's a 203B, which is a vanilla FHA loan that is standardized. The K portion, it just means we have a rehabilitation portion added to it. So it's our purchase and rehab all-in-one FHA insured 203K loan.
So it's just the same, almost the same as getting a regular loan. Only you do permits, you have a FHA inspector involved, and so on. But it's really easy to get into.
Correct. I'm sorry, Deb.
I was going to say, when would someone want to use this as opposed to another way of moving in, say, and then refurbishing it later?
Well, by utilizing any renovation loan, whether it's the FHA 203K, the Fannie Mae HomeStyle, FHA's limited product, two things. They're not having to wait. We have our purchase and our rehabilitation money all in one, so we don't have to wait. And a HELOC, if they utilize a HELOC down the road, because of our new tax code, there is no tax benefit to utilizing a HELOC when there is a tax benefit to utilizing a renovation loan. And then it all gets done at one time, so your house isn't staged piece by piece by piece by piece.
It's a really great loan. And a lot of lenders are offering it. I'm offering it. And it's almost mainstream, I would say.
It very much is mainstream. It's become more mainstream. For a lot of years, there was, an stigma that was attached to renovation loans, that they were a pain in the rear end. A lot of realtors did not like them because it took so long to close them. But the process has been streamlined to where it is a lot quicker to closing. It's just now with where the market's at, it's, everybody wants a 30-day close, and it's tough to get all the components of a rehab loan put together in that time frame, but we can do it. We do it all the time.
And there's new products coming out in this realm, aren't there? Like the veterans have a new loan coming out, don't they?
That's correct. VA has rolled out a renovation product, but it's on the East Coast right now, and it will be out here soon.
Oh, that's awesome.
In months or years, huh?
I'm thinking a few months, because obviously where we're at with the bases and everything, it would be a wonderful product for our Puget Sound region.
I agree.
That would be great because, even with a normal VA loan, they have to buy like a perfect house.
Correct. Because VA's minimum property standards are pretty close to FHA's minimum property requirements. So it's, if anything pops up, it has to be done and taken care of prior to closing, whatever's on the appraisal's condition list.
Okay. So now that we know, we're talking about these loans, but what you're an inspector, so can you tell us what an inspector does exactly, and how are you different than, say, an appraiser?
Well, there are different types of inspectors. On the renovation loans, the majority of lenders, all FHA renovation products have to have a 203K consultant. Fannie Mae HomeStyle a lot of the lenders require a consultant. Consultants actually go out, and when we do our compliance inspections, we identify the areas that have to be repaired on a property, and it's mandated that it's repaired to meet minimum property requirements for FHA insurability. Yeah, all of us are home inspectors. We all had to go take the home inspectors test in the state. You have to take your 120 hours. Nowadays, you have to take 120 hours of clock hours and then 40 hours in the field. Then you have to go take your home inspector's test. But in order to inspect a house, a single family residence in the state of Washington, you have to be a licensed home inspector.
Okay, great. Now, if I was going to hire an inspector, how would I know which one to pick?
Well, I would ask around, and as an agent, you would have many people in your office that would give you recommendations on who to and who not to hire. It's word of mouth, and nobody's perfect. You know, I'm not going to sit here as an inspector and claim to be perfect. We all miss stuff. So, I mean, you choose who you're comfortable with, and the majority of the time it comes down to who the real estate agent is comfortable with, knowing their client.
I got a question for you. It seems like as a loan officer, it seems like we never get around to doing the FHA 203K, the rehab inspection, until late in the process. What would the advantage be to doing it first off if we knew that that's what we were going to do?
Well, that's a good question, Perry, because that is one of the biggest issues we run into. Is agents have had a home inspection done, then they find out there's so many repairs that we cannot do what's called an escrow holdback for the repairs, and we have to flip it to a 203K. And at which point in time, we come out as if it's going to be a full 203K, of which we'll get in the difference between a limited and a full in the next half hour, I assume. So what they're doing is they're actually double paying for an inspection. So they have paid a home inspector to come out there, do a standard home inspection. Then an FHA approved compliance inspector and or consultant is going to come out and perform the same inspection, and he has to get paid as well. So they've double paid.
Yeah, that makes a lot of sense going in there. If you know that the house needs new carpet at least, or if it needs a lot of work or something like that, and you're going to buy it with financing, you should have the 203K rehab inspector in there as your initial inspector, in my opinion.
It would be mine too, and I do believe that onus falls on the agents when they walk around the property and, you know, they're showing it. They can see certain things that have to be addressed, and they should know, you know, what type of inspector should be out there to save their client money.
Very good. Thank you, Roger. So, Perrin, maybe you can explain a little bit about how to go about obtaining the 203K loan. What's the process like?
Well, it's really simple. It's just there's some additional items that need to be done. An inspection needs to be done. The inspector will do quite a bit, even more than just, in my opinion, an inspection. He will help work with the contractor. You have to have a contractor. We'll get into that in a few minutes. He will work with the contractor, and they will let you know how much the renovation project will be. Isn't that true, Roger?
Correct.
So that's part of that's one of the reasons why it's good to do it the inspection initially, because then you know how much the loan amount will be, and everything.
Okay. Okay, and we can get some more details on that later. For the moment, so Roger, would you recommend getting the appraisal first or the inspection?
Well, if we're doing a renovation loan, the inspection process, all the work write-up package, all of that has to be prepared and submitted to the appraiser prior to the appraisal being done, because the appraiser is actually going out there looking at a structure that's in disrepair or in need of repair, and he has the work right-up package, specification of repair. So he's saying, here's our property now, here's what we're doing to our property, here's what the property is worth after we're completed with our renovation. Just like new construction, when they go out on an empty lot and they have to give it a value to a structure that doesn't exist. It's the same concept. So our paperwork and everything that we do needs to be done prior to the appraisal being done.
So really, there's no reason to do 2 inspections, really.
No, it costs the consumer
Extra
an additional
$400.
$450. Yes, sir.
Yep.
Yes, sir.
All right. Okay. Thank you. That's really good information to know, Roger. So if you're enjoying the show, you can follow us on Facebook and keep in touch at Locking It In. Or you can send us an email at ask@lockingItin.com, and eventually you'll be able to visit that website as well. We're still trying to get it up and running. And we would definitely love to hear from you. And if you would like to sponsor our show, you can do that by calling 253-226-6454, and it'll, keep us on the air. You can hear us, keep making fun of ourselves. And and if you'd like to be a guest also, we'd love to hear from you. Or if you really, if you have a really good topic and you think we want you to let us know. And we will be back with Roger Merrell very shortly.
That was great.
Dear John, I was hoping it wouldn't come to this, but you've left me no choice. I'm leaving. Uncontrolled high blood pressure is really serious, and lately you seem to really not care. I've been there for you since day one, and I know you think I'm gonna keep ticking, but no, my friend, I can quit whenever I want. Why can't we get back to the good times, when we were more active and ate more healthy foods, and you checked on me every once in a while? Is that too much to ask? I don't want to leave, but unless you stop ignoring me, what else am I supposed to do? Remember, when I quit, you quit. Sincerely, your heart.
Listen to your heart. Don't let it quit on you. Doing the minimum to control your high blood pressure isn't doing enough. High blood pressure can lead to a stroke, heart attack, or death. Get your blood pressure to a healthy range before it's too late. Find out how at heart.org/blood pressure. Check, change, control. A message from the American Heart Association, the American Stroke Association, and the Ad Council.
Hey, Dr. Phil here. I help people solve difficult and trying personal problems every day on my TV show, but there's one problem that's just got me stumped: childhood hunger. Nearly 16 million children in America struggle with it. That's 1 in 5 kids who may not know where their next meal is coming from, despite the fact that there's more than enough healthy, nutritious food out there to feed them all. Now, I don't know about you, but that is unacceptable to me. Luckily, the Feeding America network of good people is out there collecting surplus food and giving hope to hungry children and their families at local food banks all across the country. But let's face it, they can't do it without your help. Join me in supporting Feeding America and your local food bank at feedingamerica.org.
Brought to you by Feeding America and the Ad Council. Together, we can solve hunger. Together, we're feeding America.
Welcome back to Locking It In with Deb and Pear. You're listening to us on 1180 AM Clay. And we're here in the studio with Roger Merrell. He's an inspector, and we are talking about renovation loans. Thank you, Roger. So, I as a realtor, my first question is, which of my buyers would benefit from the 203K loan, and what kind of properties would they be able to buy?
Well, they can actually buy any property, Deb. And then your clients, every client, I put it like this and always have. Every client and every property is a renovation loan, or else they would have walked into their custom built home. Nobody walks into a resale house that they don't want to do something to the kitchen, change the flooring, change the bathrooms. Inevitably, every resale house is a renovation project.
Excellent. So what is the difference between a limited and a full-blown structural rehab loan?
On a FHA 203K limited, we can only go to $35,000 in repair. That's our maximum repair, and that includes the 10% contingency. So it's actually $31,500, right around there. And all of the work has to be pretty much aesthetic and basic. We cannot do any structural repairs underneath the FHA 203K limited.
Now, you don't have to do the inspection on a limited, do you?
We do the pre-inspection for a lot of lenders, but it's not required by FHA.
But it would really help a lot, wouldn't it?
Well, yeah, we go back to the same thing. So if the client and the realtor thinks it's a 203K limited, and they go out there, they have their home inspector do a home inspection, and all of a sudden we have $15,000 worth of repair that are actually structural repairs. Now we have to bring in a 203K consultant, and they've paid for it twice.
So how do you determine what's a structural versus cosmetic?
Well, the International Building Technology Services actually denotes what is and is not structural. Structural in a structure is a tricky thing with agents, and it's a tricky thing with appraisers and underwriters. You know, most people don't think of their subflooring as a structural component of their house, but it is a structural component. So if your subflooring is rotten, that's a structural repair.
Really?
Yes, ma'am, it is.
What about the roof?
The roof. Sheathing. Most people, most realtors, most loan officers, most consumers do not think of sheathing as a structural component. But without sheathing on top of our roof pair, our trusses would fall in on each other and have no lateral shear. So that happens all the time. We get into, roofs where the sheathing has to be replaced. We do live in the Pacific Northwest. We have this stuff called precipitation up here. Tends to cause havoc on our sheathing, and people want to do it under the 203K limited, and that is technically against guidelines. Now, on an FHA, on a full 203K, it basically is the limited with structural stuff, but the sky's the limit. You go to the maximum mortgage amount for the county. So if somebody owned the house free and clear, they can do $400 and something thousand worth of rehab in Pierce County. So with a limited, you can only do $35,000. With a full 203K, the maximum mortgage amount is the limit.
But this cannot be a full construction loan. This has to be a rehab.
We do have to utilize the footprint of the existing foundation. Now, it says utilize. It doesn't say the house has to fit on that existing foundation. It says we have to utilize the foundation.
Okay, I'm
learning. So you can add a room.
Oh, we can add, yes, we can do additions with a 203K, with a full 203K. We can, do, it's not what can we do, it's what can't we do.
We can do a garage.
How about a septic tank?
No, we cannot do a garage unless it is attached underneath the FHA 203K. And the swimming pool revision was changed in the new 4000.1 where we can still only do repair.
Really?
Yes. But we cannot do a detached structure. It has to be attached. Now that's why we have the Fannie Mae HomeStyle product, which is another renovation product that Fairway actually does, where we can do detached structures and buildings,
including swimming pools.
I would have to check on that underneath the Fannie Mae matrix. I'm not sure if we can.
I don't think really swimming pools are a big issue around here,
no,
are they?
Not on this side of the mountain. I think on the other side of the mountain it is. But so we'll segue back to the 203K. The majority of renovation product, actually, to determine whether your client is FHA, 203K, or Fannie Mae HomeStyle, it's the borrower's, worthiness, lendability.
640 credit score.
Yes, the criteria is a little bit different. Down payment's a little bit different for Fannie Mae HomeStyle.
It's actually a little bit better.
Yes, and we don't have mortgage insurance.
That's
So
true.
what is the down payment for?
3%. 3%.
3%? Can you use down payment assistance along with that?
Yes, you can.
On a Fannie Mae HomeStyle, but not on an FHA 203K.
Okay.
Yes. So that segues into what Karina was discussing last week, that it would be great if FHA would come up and accept DPA, down payment assistance for the renovation products, because the majority of our down payment assistance consumers are in areas and buying structures that do need renovation and rehabilitation. It doesn't mean it's a blighted structure, but it needs a little upgrading.
See, I'm thinking there's a lot of first-time home buyers. Your income's a lot lower at that point, and so they're buying lower-cost homes. And with the price of homes today, they're only able to afford the fixer-uppers, but maybe not the down payment. So
it is, and that's where our housing stock is at right now. I mean, 4 years ago, we had property everywhere that we could purchase and renovate. Right now, it's slim pickings in the Puget Sound region.
Although in the last couple months, it's gotten a little teeny bit better.
Well, I'm sure it's gotten a little bit better, and it will get a little bit more better, hopefully.
Yeah.
But the renovation is not going to... Renovation products with K-Loan's been around since 1972. The HomeStyle has been around since 94, I think, 93, 94. So they're great products for everybody that purchases a home and wants a new kitchen, new bathroom, new flooring, whatever it may be. Every house, unless it was a custom home, is a renovation project in my eyes.
Wow. So even if it's move-in ready and it looks perfect, you can still get a rehab loan?
It could be absolutely perfect, but when...
You want to customize it.
The borrowers move in, and not to be gender biased, but when the wife wants a new kitchen and the husband says no, she gets a new kitchen. Because,
of course.
And it doesn't matter. It could be a 4-year-old home.
She's using it, so...
Well, in some houses. Not in the Merrell household. I'm the primary chef.
Oh, awesome.
So as we get into renovation, it really is not what can we do, it's what can't we do. Every property, whether it's 4 years old or it's 40 years old, if there's something in the property and in the structure that, the consumers do not like, they can change it to anything they want.
So tell me, does this include manufactured homes and condominiums?
We can do manufactured homes and condominiums at FHA. I do not know about fairways overlays on condos.
Yes. Okay.
On condos. I know they can on manufactured homes. I don't know about on condos.
But we can always do the other one.
A Fannie Mae HomeStyle. Correct. But no.
And we can do 1 to 4 units too, can't we?
Underneath the Fannie Mae HomeStyle and the FHA 203K, you can go up to a fourplex.
Yes.
Correct.
As long as you're owner occupied on the 203K, right?
Yes, ma'am. And the Fannie Mae, the HomeStyle is an owner occupant program, but it also has an investor side of it that is utilized quite a bit. The 203K, we used to actually have the investor side to it, but it's been gone for a long time.
FHA just likes doing owner occupied loans. Primary residence loans.
I think their goals are not aimed at the investor.
On the residential stuff, the bigger stuff are 221, 221 D4, 232, 223 projects. Those are all very large apartment complexes.
That's true.
And that's all HUD FHA.
And you do those too, don't you?
We do the inspections on them. We do. Pre and post construction. So let's get back to the Fannie Mae HomeStyle and the 203K with the utilization of what the consumers can do. So if I can take the time, I would like to walk you through the process. Looks like we got a little bit more time here.
Yeah, okay. Go for it.
So the process, the purchase and sale is executed by the borrower, by the buyer and the seller, at which point in time we prefer to come out and do the inspection. So if it has to go rehab, then we've already completed 60% of the process of a renovation loan. If it doesn't have to go rehab, the client still gets a good home inspection. But prior to that, or after that, if we have any issues that need to be addressed, we will gather with we prepare what's called a deficiency report. It's a compliance inspection that's geared towards renovation lending and a rehabilitation program that shows the consumer, the agent, and the potential contractor what has to be done to that property. That's all we deal with, is what has to be done to the property. So at that time, we obtain bids for the renovation project. So based on the deficiency report, so that is our have to list. Then all consumers have their want to list. That's where we get into, what they want to do additional over and above what has to be done. At that time, we will obtain bids from contractors. Borrower picks a contractor that they're comfortable with using, and it does take a lot. We have different contractors running around out there, and I think in the next segment we'll get into the keys to what makes a renovation project go smoother. But once we get the bid in, we actually have to cost the project back out to make sure it's within side of the scope and a tolerance of cost basis price point for where we're at geographically. We prepare what's called the work write-up package and architectural and engineering product. And that is what goes to the appraiser. The appraiser goes out, appraises the structure. Here, structure sits, here it is, as is value. Here's what we're doing to the property. Here's the after improved value. We go to funding, go to closing, we fund, we start work.
And then how long do we have?
We have up to 6 months to complete the project unless there is a situation where it garners extension.
Sounds good.
And in the Pacific Northwest, we have a lot of those.
Do we really?
Yes, we do. To include, not enough workforce right now. Contractors are limited right now.
All right, thank you. We'll be back right in a few minutes.
This ain't my first rodeo.
Why is Connor having trouble focusing in school?
Having trouble finding Connor's middle school? Would you like directions?
No, why is Connor having trouble focusing in school?
Finding lowest airfare to Istanbul.
No, I'm tired of fighting with him over homework.
Home, walk, restaurant. Need a review?
No, I need help. He's very smart, but his mind wanders. He's disorganized.
I think I understand.
Oh, good.
Finding best potatoes for French fries.
No!
Russet, fingerling, Yukon Gold.
Why don't you understand me?
Sorry, I was trying to show how Connor feels every day. Frustrating, isn't it? Redirecting to understood.org.
For the 1 in 5 kids with learning and attention issues, this is what life can feel like. Explore understood.org, a free online resource about learning and attention issues, designed to help your child thrive in school and in life. Understood.org, because understanding is everything.
Brought to you by understood.org and the Ad Council.
Ian Ralston was a combat medic who suffered a catastrophic war injury in Iraq. When I met Ian for the first time, I knew we had to do everything we could to get him every benefit he's earned to live as normal life as possible. And we did. He needed an accessible house. We got that grant. And a van for his wheelchair to get him there. My name is Jason Stevenson, and I work for Paralyzed Veterans of America.
America's most seriously injured veterans are getting all the care and benefits they've earned, thanks to Paralyzed Veterans of America. For over 65 years, Paralyzed Veterans of America has helped hundreds of thousands of veterans, and their service is free to all veterans and their families. Paralyzed Veterans of America, changing lives, building futures. To learn more, visit pva.org. A public service message from Paralyzed Veterans of America.
Welcome back. You're listening to Locking It In with Deb and Pear here on Clay 1180 AM. And once again, we're in the studio talking to
Roger Merrell.
Roger Merrell of Merrell Inspection Services. Nick Baker will be here next week. He's going to talk about carpeting, and we're looking forward to that as well. So let's move on to this wonderful topic of home
Rehab
inspection,
loans.
rehab loans. So how long does the construction usually take? Like 60 days, 90 days?
I'll tell you this, Deb. In all of my 27 years and roughly over 8,000 of these, whenever a contractor, and I love all my contractor friends out there, my son's a contractor, but when contractors say Monday, that usually means a week from Thursday. And when contractors say May, that usually means the end of August. And it's not always their fault. I mean, we have material issues, we have labor issues, we have weather issues. And so to sit here and state, we actually go into every renovation project saying it's going to take 6 months. A lot of contractors tell borrowers it's going to take 90 days, which all it does is set the borrower's expectations high and everybody else to fail. And then we have our issues when on the 91st day, her kitchen is still torn apart and his garage is not built. And then we have big issues. And that's when we have to get together and have big powwows. Happens all the time. So with that being said, the majority of the renovation projects, and it depends on what the project is. I have projects that we go all the way down to the foundation, to historical projects, to, a bathroom or a kitchen and a bathroom. So it depends on the project. We always go in thinking it's going to take 6 months. And if it's shorter, yeehaw. And nobody wants to be out of their house for 6 months.
Now, the FHA 203K has a special provision in terms of money that the payments for three payments can be rolled into the 6 payments can be rolled into the into the loan, so that the buyer can still be renting until he's ready to move into his new house. Is that true?
That is correct, and it correlates with the 6 month period for construction. That's the max. So they give you 6 months of mortgage payments that we can roll into the rehabilitation loan, so they're not paying rent and a mortgage. But we do have people who are, living in tents, living in containers. I actually had a client where the container looked better than most apartments I've seen in my life.
Oh, yeah.
So, I've seen it all over the years, and we try to do 6 months, but...
Now, this brings up another point that we haven't discussed about refinance rehab loans.
Do them all the time. All the time. And quite honestly, probably 25 to 35% of our business right now on the renovation side is refis, where they've been in the house since 1972 and it's time to upgrade. But if they hold off for another 10 years, the mahogany and the orange carpet and everything's going to be back in style. So I would just
either
hold
way,
off personally.
Either way.
It's a win-win situation.
So how are the contractors paid?
The contractors are actually paid now. If we're doing a limited, the contractors get up to 50% of the cost of renovation at closing. So that gives them seed money to get the project done, and then they get the remainder after the final inspection is completed. Now, on a full 203K, a contractor is paid on the draw basis, which means if it's not nailed, screwed, or glued to the property, he's not getting paid for it. We do have provisions for upfront money, which happens to be special order items, cabinets, flooring, but that's it. So it's done on a draw process. That's why very, very few, there's a lot of contractors who are new into the industry that can't do it because they can't float a project for 30 days to the next draw, which I understand. We all started out somewhere, and that's why we have, at Merrell Inspection Services, we have a core of contractors whose work we prefer to see. We don't recommend them, but we prefer to see their work. Great guys. They understand the 203K project process and any Fannie Mae HomeStyle and or the 203K.
So what if the homeowner, what if they want to speed up the process and do some of the work themselves?
That is usually where everything falls apart, is where the homeowner wants to get involved and speed up the process. Not as though we have a lot of homeowners that are in the trades, understand the trades, can do wonderful, beautiful work. But once a homeowner gets in and that starts throwing off a contractor's timeline, contractor's waiting for homeowner's waiting for contractor. Now we have two people to blame instead of one person to hold accountable. Then it ends up being quite a mess. So we prefer, actually most lenders, all lenders that I know of, every lender we deal with right now, and it's probably
That's a lot.
Yeah, 120 something lenders. They all require a licensed bonded general contractor on the job doing the work.
Okay.
So are there some things that cannot be done in this type of loan?
Some things that cannot be done?
Yes.
Well, in the guidelines on an FHA loan, it states luxury items. Well, this has gone back down to Santa Ana Home Ownership Center, which is our regional headquarters for HUD, and nobody can determine, the argument was, what is a luxury item? Because in what Bellevue, or let's say what, Tacoma calls a luxury item, Bellevue calls normal.
Right.
So I can't define what is luxury to you. You can't to me. As I see you say.
So it's not a federal guideline?
Who do you define it?
Well, we try to define it. I think it's not, luxury. It's excessive. We're not going to put in a sound studio underneath a 203K renovation project. But when you talk about luxury, we get into appliances where we have ranges that are $4,000, $5,000, $6,000. I mean, I just had one where one of our contractors that does a lot of renovation lending for us, Northwest Remodelers Consultants, they installed a $7,000 range, I think it was, in the property, $6,500 range. For some people that is a luxury, but for some of us it's not a luxury.
It depends how you use it.
Well, if that's what you cook on, that's what you cook on. So that's that fine line where it says luxury. So I don't get into quantifying what somebody else's personal beliefs are. That's
but
not
there's
my
no
job.
federal guidelines for that.
How do you guidline that?
So I have a
swimming
question.
pool, maybe? I don't know.
Before we run out of time, I wanted to know if you had any recent horror stories or any old-time horror stories that you could tell us about.
Oh, Perry, I could sit here for the next hour and tell you
Maybe
about
something
horror
particularly educational for a home buyer.
I think instead of a horror story, let's put it in perspective of what causes the most problems during a renovation loan. And I have to say, first and foremost, number one, just like in anything else in the world, it's communication. The contractors, the borrowers, everybody's on a different wavelength. The borrower is, envisioning Shangri-La. A contractor is envisioning, builder's grade. And at the end of the day, somebody's going to be upset. Either the contractor's going to be a little upset that he's got to put in higher end products, or the borrower's going to be upset that they got inferior products. And now today, and unfortunately I've been in this industry long enough to watch this cycle, when I get the question on site, what's the biggest delay on getting a rehab closed today, I say HGTV and Pinterest. Because we can start off with this, and lo and behold, they see this on
HGTV.
Yeah,
complicates
I
things.
totally understand that.
Yes, and and everybody doesn't realistically understand Seattle, the Puget Sound region. We're in a high cost area. Our cost of building here is a lot more than it is around the country. And so we get into those issues where it's communication and changing. Everybody's always changing because you can't quantify to the nth degree what we're doing on a renovation loan, or we would have stacks and stacks of paper that says what all we're doing. So we have to have a vision, a unified vision, so we can go in and accomplish it.
So what about changing contractors in the middle of a project?
Happens all the time. Seen a number of them get fired for one reason or other. We can do it, and sometimes, the majority of the time, once it starts going bad, it just goes bad. And it's best to cut bait instead of fish and get on, change contractors, bring in fresh perspective, and then we deal with that all the time. And
What
we
about
work on
legal
that.
additions on homes and illegal additions on homes?
That's one of the biggest issues that we have. I have a problem, one that I'm dealing with right now that's in litigation, where there was an illegal addition that was on the back that was not identified by a previous inspector. And it's now, we're in litigation over it. The city of Tacoma is involved, and it's quite a pain in the rear end. So we run across a lot I know me personally, when I go and I have a renovation project, when I show up to do my original consulting and inspection, I've already done the complete background check on that property. I know any and all permits that were ever issued on that property and or were not issued on that property, as usually is the case. I know the exact square footage of the property through all the county records that we pull up. So if I come out, we go out and there's something that, isn't there.
You say a red flag.
Yes, see a red flag, and we have to bring it up to the lender or pretty much the agent and the borrower and say, hey, we got a situation here that we know we're going to have to address.
Because you can't close a loan a lot of times if there's an illegal, with financing, if there's an illegal addition on
that is correct.
Property.
That's correct.
That's something I've learned with my experience.
That's correct. That or non-permitted stuff that happens. That's part of what, that disclosure form 17 is, huh, Deb?
Yeah.
So real quick, before we end, your son, Roger Merrell III, is getting into the inspecting business in the next week or so. Isn't that true?
That is correct.
And what kind of inspections is he going to be doing?
He's going to be doing our home inspections, our housing quality inspections, our PHA inspections, and he's going to be a great asset to the team and take a load off the old man.
That's great. Yeah, well, Roger, we're so glad that you joined us today. You have given our listener a lot of information. If you want more information, you can download this as a podcast later. Just visit us on Facebook at Locking It In, and you'll have a link there. And next week, we will be talking with Nick Baker. Thank you for listening to Locking It In with Deb and Pear.
Thank you.